Hi YouTube, it's Olivia or your girl Liv. If you're a returning subscriber, welcome back to my channel, or if you're new here, welcome. So today I'm going to talk to you guys about how I bought my first house at 21 years old. Yes, 21. Now, whenever I tell people I'm a homeowner and then I tell them my age, a lot of people are in disbelief, or the first question that they ask me is, how was that even possible? Or I didn't even know that you could do something like that so young. And let me just go ahead and start by saying that you can buy a house as long as you're of age to basically have credit. So if you are 18 or older, if you're 18, more power to you. You can buy a house at 18. It might be a little bit more difficult, but you can do it. So a lot of people seem to think that they're not thinking about buying a home until they're at the age where they're well established in their career, or they're getting ready to get married or have kids, and that's the time that you start looking at buying a house. But for me, I wanted to go ahead and get that done soon. I was actually thinking about becoming a homeowner around 19 was when I really started looking into the process and asking myself the right questions, getting myself ready and deciding if that was even the right step. Before I get into talking about when I started the process of looking for a home and applying for a mortgage, I'm going to talk about some pros and cons and just kind of help you understand if that's even something that is necessary for you to do right now. So there's many advantages to renting and there's many advantages to buying. So first, I'm going to talk about the cons of buying a house and why you may want to elect to rent or continue to live at home with your parents or family members or roommates or whoever you may be living with. So as far as the cons go, when you buy a home, that is something that is very permanent. Unless you are making a lot of money and you can pay that house off in the next couple of years, most people go for a mortgage that is around 15 to 30 years. My particular lender did have an option for 10 years to pay a mortgage, if you can do that as well. But if you do not plan on staying in the city where you're purchasing a home for at least 5 years, then I would not recommend buying a house. Because you never know when something may happen. You may have to move. If you are still in college or you just graduated and you are in a career that may require you to travel a lot, or you may see yourself relocating, or you're married and your spouse may be relocating, or you're military. I mean, there's so many different reasons to rent. Why, if your location is not going to be permanent or you don't plan on it being permanent, then you shouldn't plan on obtaining a mortgage. Because, again, that's a big decision and that's going to have a big determination in where you're going to be staying for the next several years of your life. Also, keep in mind that when you purchase a home, and there is no landlord that you call when something breaks. Now that your name is on this mortgage, you are responsible for any and all repairs. If you have an appliance that breaks down, if you have, I live here in Florida, so if you have a hurricane and there's some kind of damage to your property, anything like that, you are going to be the one who's responsible to fix it. So that is one advantage of renting, is you do save money on repairs and things like that because your landlord owns wherever you're staying, and so he or she is going to be responsible for fixing that. Another con to purchasing a home, in my experience, was that your monthly expenses will probably go up. Now, in some situations, depending on how good of a deal you get for the house and how your mortgage payment is structured, your living expenses actually may be less. But for me, mine went up a little bit. Not much, but a couple $100s. So at the apartment that I was renting, my water bill was included in my rent, as well as sewage, and everything else that I was paying for was electricity and internet. Those were the only bills that I was paying at my apartment. Now that I purchased my home, I am responsible for the water bill, the trash. I am also responsible now for homeowners insurance, which were 3 new bills for me. And so that could cost, thousands more a year, depending on what area you're in. Homeowners insurance prices are going to vary, but those are some new expenses that you'll be taking on. Also, just little things like the expense of maintaining your home. If you don't plan on cutting your grass, I do pay someone on a regular basis to come out and maintain my lawn for me. If you are planning on taking up any new renovations or anything like that, just those are pretty much like the basic expenses that I encountered whenever I first moved into my home. Now we're going to talk about the pros, okay? The reasons why I am here in this house, the reason why I said, I'm going to go ahead and submit this application and I'm going to go ahead and move forward with buying. So the first pro, in my opinion, is that you are not throwing your money away anymore to someone else. So every mortgage payment that you make goes towards the balance of your loan. And so eventually, if you are hopefully making those payments on time and regularly, even if you are making a little bit extra, good for you as well, you will eventually own that home. Your name or your partner's name, whoever else is on that mortgage with you, will have a home and property in their name. Now, that is something that you can choose to do whatever you want with it. After you've paid off that home, after how many years, you can choose to sell it if hopefully your property value has gone up and you can sell it for more than you bought it for. You could hold on to it and rent it out or Airbnb, or you could just save it and have something to keep in your family or pass along to your children if that's what you choose. Now, for the next pro. This is a big one for me as well. If you own your home, you get to do whatever you want, okay? You can paint the walls whatever color. If you want to go knock down a wall in your kitchen and open up the floor plan, if you want to paint it, if you want to have your own garden, if you want to, you say the fence is ugly, I want to knock this down and put down a new fence, or I want to raise 10 pit bulls in my house and I want to turn it into a dog farm. Whatever, it's your property, you can do what you want with it. Unless you're living, now if you do purchase a home in a homeowners association, you are subject to their rules and regulations. But fortunately for me where I live, I do not have a homeowners association. So I get to do whatever I want with this property. I get to develop it however I want. I don't have to worry about a landlord saying that I can't have pets. I don't have to worry about a landlord saying you can't have guests over for this amount of time unless they are on the lease. Whatever, it's your property, you are in charge, you have that freedom. Another pro, which I think is going to be a little bit more attractive to a lot of you, is that it actually does end up being cheaper. So for my instance, where I was renting at, when I first got my mortgage, my apartment was costing me about the same amount as my mortgage is now. Now, my property taxes did go up this year, and so it ends up costing me a couple $100s more now this year in 2022. But a lot of times you'll be surprised, depending on the purchase price of your home, what you're paying to rent could actually be more than what you would be paying on a mortgage if you were paying to own something. So that all depends on your interest rate that you're locked in, of course, and how much your monthly homeowners insurance is going to cost and how much the property taxes in your area are going to cost. Now, this is one good thing about your mortgage, the principal payment. Your mortgage itself can never go up, okay? It can decrease if you decide to refinance, which is a whole other situation. But to start with, you will get a document before you sign the loan on your house, or before you sign and get the keys on your closing day, and it will have everything that you need to review. And it will tell you certain numbers that are part of your mortgage that can increase and that cannot increase or change. So what I pay monthly just for the principal of the sale price of this home will not increase. So I'm protected from things like landlords hiking up the cost of a rental. So like I was saying at the beginning, when I was renting my apartment, and every year after that, the rent increased, because as the landlord, when you sign a lease, you are signing on whatever amount that they agree that you're going to pay them every year. Now, that amount after you sign the next lease, after the next year, can go up. So you could go from paying $800 a month to the next year paying $1,200 a month. And unfortunately, in the housing market that we're in today, and the way that the economy, the direction it's going in after COVID, a lot of people saw that. And as a renter, I was one of those people that saw that cost increase. And so with a mortgage, you're much more safe and secure. And another thing is that a mortgage lender is more likely to work with you if you are, having maybe a month or two where you're not able to make those payments. Like for COVID, a lot of people were not able to make their payment on their rent. And then after the rent, the eviction moratorium, I think whatever it's called, that the government had passed, saying that if you were not able to pay your rent due to COVID, they were going to put a pause on evictions. Now, whenever that pause was over and people are now responsible for rent, their landlords were like, okay, well, you haven't paid in this many months, you got to get out of here. Usually with the banks, you have a little bit more flexibility and a couple more chances for them to work with you before you face foreclosure. Next, I'm going to go over the check marks with you, the basic questions that I asked myself. So if you've decided that renting, when you look at the pros and cons of renting versus purchasing a home, and you've decided purchasing a home seems more feasible, it sounds like the better option for you, we're not ready to go ahead and apply yet. First, we need to ask ourselves, do we meet the criteria and the check marks to even be considered by a lender to be a loan applicant? So one of the first things that you need to ask yourself is, are you in any debt? And if you are, how old is the debt? How much is it? If you have maybe, a few $100s, or I'd say like $1,000 or less, and this is going to be really specific to the lender, what they're going to be looking for. But if you have over a couple $1,000s in debt, you may face having a higher interest rate or being required to put down a higher down payment because you tend to look more risky to the credit lender because you already owe someone else money and then you're asking to borrow money. So if you have student loans, whether you're still paying a mortgage on another house or you're deciding to refinance, those are just some things to think about as debt, because they are going to look at that. They're going to take into account something that's called your debt to income ratio, which is basically how much money do you make every month minus how much money are you owing other people. Are you prepared for this big commitment? Now, being young and purchasing a home, I had to make a lot of sacrifices. So when I see my friends going on these big trips and these music festivals and things like that are going to cost, over $1,000 per trip, that for me is going to cost me more than my mortgage. And I have to take into account how it's going to affect my bills and how it's going to affect me being able to afford my monthly expenses. When you choose to purchase a home, it's a lot more serious. Like if you get behind on payments and you get too far behind, you could face foreclosure, which is something that hugely affects your credit. It's going to be on your record for a very long time. It's not as simple as missing a rent payment. You do deal with the effects a lot longer, and it does affect your ability to try and seek out credit or another loan in the future. So those are big things that I had to think about. It was a big commitment for me because are you ready to commit to, if you have any kind of costly repairs that may come up in the future, are you ready to be responsible for that? So if you go ahead and say, yes, I am ready to commit to this long-term loan, then you're ready to go on to the next step, which is asking yourself, am I financially prepared for this? Do you have at least several $1,000s to afford your closing costs if you have to pay them, and a down payment and moving expenses? So for me personally, I'd say for a rough estimate of what I had to pay to actually get the keys in hand and to be spending my first night in my home, I paid about $5,700. For those costs, it included having an appraisal fee, which is where you have a property appraiser come out and compare your home to the homes in your area and the sale price and the contract and see if your home's even worth what you're trying to buy it for. That was about $475, I think. And then you have to have a home inspection, which if you're getting a loan, they're going to want you to have, where an inspector comes out and looks at the home. It's a little bit different than the appraisal, but it's a little bit similar. They don't compare your house to the other homes. They just look at how structural defects, how they could negatively impact the value of your home. So do you have roof damage? Do you have termite damage? Do you have a really outdated kitchen that could be, way behind the other homes and how they're being remodeled in your neighborhood? Anything that could negatively impact your home. Do you have a water heater that is not operating or not functioning properly? Things like that. Then you have to pay for we have to pay for what's called a wood destroying organism inspection, where they look for things like termites and other organisms that could be eating away at the wood if your house is built out of wood like most homes are. You also get into something that's called closing costs. Closing costs are a little bit more general because it includes all of those fees I mentioned plus your realtor's fee, And so getting a realtor, it is free to obtain one in the beginning. And the way that they get paid, if you are a buyer, the mortgage lender is going to roll those fees up all in one. And you can either ask in the contract for the person who's selling you the home to pay your closing costs, which in my instance, I was responsible for a majority of my closing costs, and so I had to pay that. That came out to about, I'd say, at least $4,000, and then everything else was just extra fees that I had to pay for my inspections. I did opt to pay for movers to get me into my home. That's totally optional, but if you are moving long distance, then you may not really have a choice but to pay movers. If you have a lot of stuff and you're going to need to rent a large truck to haul it all in, that's another expense that you could be incurring. Next, we're going to talk about jobs, because if you don't have a job, you are more than likely not going to get a mortgage loan. Unless, you happen to have enough money, I guess, to pay almost cash for your house, which if you do, you probably would not be on this video right now learning about how to know if you're even ready to purchase a home. But have you been at your job for at least 2 years? Now, that's something that a bank is going to be looking at, and they are going to be verifying your employment. They're going to be asking, how long have you been at your job? Have you had a pay cut? Have you had a pay increase? They want to make sure you have a steady income. And even though you can pay them even though you can pay them right now, they want to make sure that you can afford to pay them in the future for the next 30 years or so of your loan. You've gone through all those check marks and you've said to yourself, yes, I am ready to go ahead and purchase a home. So the first step is going to be applying for pre-approval. So for me to figure out how much I needed to get pre-approved for, I went on Zillow and I started looking at homes in my area and what size these homes were. I kind of had an ideal amount of bedrooms that I wanted in a particular side of town that I wanted to stay on, as far as being close to the family that I do have here and being closer to work. So I had to figure out how much was that going to cost me for a home of that size on this side of town, and then I figured out how much I needed to ask for. So I definitely recommend, when you are applying for this mortgage, ask for more than you think you're going to need, because you never know when you may have some kind of surprises. The seller they may ask more than they were originally listing on the house. You may have more people trying to look at the same home, so the price goes up. I mean, there's all kinds of reasons. You may find a home and that's in your budget, and then it just doesn't work out. Like in my experience, I looked at several homes before I found one that I was ready to put an offer in, just because I did not feel like for that price, those homes were worth me putting my money into. So you may decide to up your budget a little bit and start looking in the next price range. Like, for example, if you're looking for something specific, like you want a pool, or you want a house with a fireplace, or you want something, you want a screened-in porch or something like that, and all the homes that you're looking for in that price range, in that budget, do not have these features, you're probably going to need to up your budget a little bit. So just be prepared to ask for more than you need. Next, the bank can give you something called a pre-approval. In my instance, I got that pre-approval within about 2 hours of applying. And with that pre-approval letter, I took it to my realtor, and she said, great, let's go ahead and start shopping. So we went ahead and started looking at houses in the area. She asked me to kind of give her a list of some things I liked. She also submitted some homes to me that she thought fit my criteria, and we went and checked those out as well. And take your time. You're young. You have plenty of time. Like I said, I'm 21 years old. If you're around my age, don't feel like you absolutely need to rush. Shop around, because you're going to find a lot of beautiful homes out there, and you may even put in an offer for a home and not even get it, which did happen to me as well. I did get my heart broken a couple times where I looked at a home and someone else was interested in it as well, and they put in an offer for $20,000 or $30,000 more than my bid. So that's gonna happen. Just shop around. You may also realize that maybe what was something that you really wanted in a home before may not even be that big of a deal. Like, for example, if your thing is, I want a home with at least 2 bathrooms, you may start looking around, and when it comes down to it, for the price difference, you may just say, I don't care, I can deal with 1 bathroom, especially, if you're living by yourself, or it's just you and your spouse, things like that. So take your time, shop around, see what's out there. It may even kind of change your mind a little bit. Let's say you walk into a house and you say, this is the one, I want to go ahead and put an offer in. Your realtor, if you're working with one, will go ahead and write up an offer for you, and they will let you know what the result is. So whether your offer got accepted, or it got accepted, but they want you to kind of change the terms of the contract, or your offer did not get accepted. But once you do get an offer accepted, you are good to go. So the next step is when you are going to go ahead and submit that contract between you and the seller to your bank. This is when you are going to you're going to get ready to go into underwriting, which underwriting is where the mortgage lender is going to go ahead and verify your income. They're going to go ahead and take every piece of information they can from your contract, from this home, and make sure that they are making a smart decision by lending you this money. They're going to go ahead and order an appraisal on that home. They're going to go ahead and if you have any like, for example, the house that I was moving in, we had an agreement for construction on a septic tank to be done. And so I was not going to move into this house, and my bank was not going to loan me the money to move into to this house until the new septic tank had been built. So if you have any kind of agreements like that in your loan, they're going to go ahead and reach out to contractors. Maybe they're going to ask for permits and make sure that the work that y'all are asking to be done is actually being done, because if not, then the bank is just wasting their time. Now, my tips throughout this process while you're waiting for your loan approval are, 1, do not quit your job. A lot of people get really excited. They decide, I've gotten approved for the loan. I'm good to go ahead and, find a new job. I don't need this job anymore. Or they're going to go ahead and search for a job that they may make more money now because they're going to have a mortgage payment. And that's a big red flag to lenders, is if you decide to go ahead and quit your job, then you no longer have that verifiable source of stable income. Because believe me, they are going to call your job more than once. They'll probably call it in the beginning, whenever you get your pre-approval, and they will probably call in just days before your closing to make sure you are actually still working there. Another thing that you don't want to do is go ahead and rack up any new debts. So don't open any new credit cards if you can absolutely help it. Do not apply for any new loans. If you're thinking about trading in your car, please try and just wait until you get in the home to do these things, because you are under a microscope from the minute that you go ahead and apply and get pre-approved for this home up until the second that you walk out of that title office with the keys in hand. Another piece of advice I have for you, which is a lot easier said than done, I know, but if at any point throughout this process you have any doubt in your heart or you see any red flags, go ahead and walk away while you can. Okay, even if you put down $1,000 deposit and you're not able to get it back, but you just don't feel right about the purchase of this home, I would much rather spend $1,000 knowing that I did everything that I could and I investigated before I purchased this property than knowing I went ahead and got locked into a mortgage I was not ready for or I didn't know everything about. So whenever I was 19, I actually looked at purchasing a home. And after the home inspection and the appraisal came back, it turned out the home was not worth what I was about to pay for it, or what I had been approved for. It was devastating to me to have to walk away from what I thought was going to be my dream home, but it did save me a lot of money in the end to wait. Now that I am finally in my home, I went through the long waiting process. My closing actually took a lot longer than I expected. We originally planned to have to be closing in 30 days. For me, it took about 55. Usually, standard is to close on your home in about 30 to 45 days. Sometimes if you're flipping a house or it's you're paying cash, some people will close as early as like 10 days. But normal is to close in about a month. My mortgage lender was kind of slow throughout the process, to be honest with you, so it did take me almost 2 months to close. But I am here and I don't regret my decision. I am very happy that I purchased my home. I am happy that I can do what I want here. I love it. I love being able to do what I want with the property and just coming home every day and knowing that this is mine. This is my space and I can do whatever I want with it in the future. I can use this home however I choose to. So I really hope that this information helped you make a decision. And if you are someone that is, like I said, looking to purchase a home and you feel like you can't do it because you're young or you don't know where to start, and please realize, like, this information, I don't think that I just woke up one day and was the first person to realize this. All this info is out here. It's free and it's available for you guys as well. I've just kind of collected some info through my experience and from talking to other people and utilizing the resources that I had to kind of help compile this information and bring it to you guys. So that's all for today's video. Thank you so much for watching. Please subscribe so you don't miss when I make another video. And thank you so much. Don't forget to like this video. Bye, guys.